Raw material 50% of the selling price, labor 10% of the selling price, 50% of 80 is 40, 10% of 80 is 8, 15% of 80 is 12, labor half, then overhead half. Here extra is manufacturing expenses. You have to convert all the things in the form of profit. Hello, my dear student. I am Dr. B.S. Subramanya, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Grade College, a Temple of Excellence, MYSURU. I am going to hand Financial Management 2 of the final year BCom. The session goes Working Capital Management, Session 3. We already discussed Session 1. Session 2, now we'll move on to Session 3. So before going to the problem of Session 3, so what I told in the last class, just go back, just hint back what we have told in the last class. So what I told in the last class, what is working capital? I told you. What is working capital? So there are two types of capital, I already told you. One is called fixed capital and it is called the working capital. Fixed capital is going to remain for a long time, whereas the working capital is only for day-to-day operation. So day-to-day operation is called working capital, and the long-term asset like this, land, building, machinery, furniture, motor car, which is going to use till the life of the company is considered. So we can say that it's a long-term capital. So there are two types of capital if we come back. One is called fixed capital, one is called the working capital. So now we are focusing on working capital. See that we are focusing on working capital management. So in management language, what is working capital? Current asset minus current liability is called working capital. So what is working capital? Current asset minus current liability is called working capital. I already told you in the last session which are the items that will come in the current asset, which are the items will come in the current liability. Once again, I will repeat the same before going to problem. What are the current assets? Are cash in hand, cash at bank, debtor, stock, work in progress, prepaid expenses. I will repeat: cash in hand, cash at bank, debtor, bills receivable, closing stock, work in progress, and prepaid expenses. Which are the current liabilities? The current liabilities are lag in payment of wages, lag in payment of overheads. No, creditors are there for raw materials purchase, bills payable, you have to pay to bank loan, and bank overdraft may be there. There's a provision for taxation will also come. So current asset minus current liabilities. How the debtor arises? When you make the credit sale, the particular party becomes the debtor and the company becomes the creditor. If we make the sale, X sells to goods to Y, Y becomes the debtor and X becomes the creditor. So how you become that? So the company is owing, B become the debtor and outsider becomes the creditor when you purchase the raw material on the credit basis. Purchase the raw material on the credit base, B become the debtor and outsider becomes the creditor, is considered as per the accountancy language. So we'll move on to problem now. So this is a statement they have given. Estimate the working capital requirement of XY company for the year 2013. The estimated production is 1,24,000 units, ratio of cost to the selling price. So here they have not given the actual price, the proportionate is given on the selling. Raw material 50% of the selling price, labor 10% of the selling price, manufacturing overhead 15% of the selling price, selling overhead 10% of the selling price. Raw material in stock, an average of 2 months before production. Then, so 1 month means 4 weeks, 2 months means this is 8 weeks. Then, every unit of production remain in process for 2 months. 2 months means, once again, 8 weeks. Finished goods remain in warehouse for 4 months. 1 month means 4 weeks. 4 months means 16 weeks. 1 month, 4 weeks. 4 months means 16 weeks it is going to remain. Then credit allowed by supplier is called creditor. 3 months means 12 weeks. Then credit allowed to customer means debtor. How many months? 3 months, 1 month, 4 weeks, 3, 4, 12 weeks. 20% of the sold is for cash means 80% is the credit sale. Selling price per unit is 80 per unit. You must be very careful per unit. Both the production and sales in the regular cycle in a month there are 4 weeks. Means you have to convert all the things in the form of 4 weeks. Here means production, total production will be going on sale. We mean to say that whatever we produce, all things have been sold here. Now, regard what is the per unit? 80 is there. They have given the percentage. Calculation of cost per unit. Total selling price rupees 80. First one. Raw material 50%. Raw material 50% of rupees 80. It works out 40 rupees. Number 2. Direct labor 10%. Direct labor 10% of rupees 80. 10% of 80 is 8 rupees. 10% of 80 is 8 rupees. Manufacturing overhead. MFG. Manufacturing overhead 15% of rupees 80. 10% is 8. 5 means 12 rupees. Then selling overhead. Selling overhead 10% of rupees 80. See that how many percentage? 10%. 8 rupees. Add 8 plus 2, 10 plus 18. 1 plus 4, 5 plus 1, 8. 68. Total cost 68. So 50% of 80 is 40. Direct labor 10% of 80 is 8. Manufacturing overhead 15% of 80 is 12. Then selling overhead 10% of 80, 80. 8 plus 2, 8, 10, 18, 5, 68. Plus profit. Selling price 80. Difference 12 rupees is the profit. Difference. This is important for us. Then, regarding the sale, the problem says 20% output is sold for cash. What's your total production? 1,24,000. Production for the year 1,24,000 units. minus 20% cash sales. So 1,24,000. 1,24,000 into 20 divided by 100. 1/5 of this. 1,24,000. 124 followed by 30. 24,800. 24,800. Deduct 99,200 is the credit sale. This is 80%. 1,24,000 into 80 divided by 100. 99,200 is the credit sale. So your total production is 1,24,000. So cash sale is 24,800. Credit sale is 99,200 is there. So we'll move on to problem now, slowly. So we can work out here. Debtor, debtor 99,200 divided by 52 into credit allowed to customer is 3 months, means 12 weeks at a cost of 68. Debtor on the credit sale 99,200 divided by 52 into 12 into 68. 15,56,000. 15,56,677. 15,56,677. So 99,000 divided by 52 into 12 into 68. Creditors on raw materials. Creditor on raw materials. Creditor allowed by supplier is 3 months on the raw material. Creditor 1,24,000 into 52 into how many weeks? Credit allowed to supply by supply 3 months, 12 weeks. Or the cost of raw material 40. So 1,24,000 divided by 52 into 12 into 40. 1,24,000 divided by 52. This is 23,82384.6 into 12 into 40 into 12 into 40. It comes to 11,44,000 615, 11,44,615. Okay. Check once again. 1,24,000 divided by 52 into 12 into 40, 11,44,615. Okay. We'll move on. Okay. We go with one by one. Raw materials. What is the first one? Raw material in process of 2 months, 8 weeks. So 1,24,000 production divided by 52. Then your cost is 40. How many weeks it is going to stay raw materials? Raw material in stock 8 weeks. So 1,24,000 divided by 52 into 40 into 8, 7,63,076. 7,63,077. 7,63,077. Now, work in progress. How many months? Work in progress. Very production remaining process. 2 months means 8 weeks. 1,24,000 divided by 52 into how many weeks? 8 weeks into raw material is 40. 1,24,000 into 52, both are 8 weeks. 8 weeks. So 1,24,000 divided by 40 into 8 into 40, it works out 7,63,077. Labor 1,24,000 divided by 52 into 8 weeks. What's the labor cost? Direct labor 8 rupees into half. 1,24,000 divided by 52 into 8. 1,24,000 divided by 52 into 8 into 8 into 1 divided by 2. 76, 7,67. Here it will come. Half of this. 7,6,307, 308. 76,308. Overhead 1,24,000 divided by 52 into 8 weeks into overhead. Selling over 8 rupees 8 weeks, 8 into half, say 76,308. Then manufacturing D, manufacturing expenses, 1,24,000 divided by 52 into 8 weeks into 12 into half. Extra. Manufacturing expenses 1,24,000 into 8, 1,24,000 divided by 52 into 8 into 12 into 1 divided by 2. 1,14461 or 62. 1,14,462. So 1,24,000 divided by 8 into 12 into half. If you add all these things, no, this is 7,63,077 7,630,77 plus 76,308 plus 76,308 plus 1,14462 10,30,155 10,30,155 10,30,155. Next, we'll go to next one. Finished goods on the cost price. Come back here. Finished goods for 4 months means 1 month means 4 weeks means 16 weeks. Finished goods. 1,24,000 divided by 52. Then your cost is 68. How many weeks it is going to stay? Finished goods 16 weeks. 4 months. You say 4 months? No. 4 months means 16 weeks. $1,24,000 divided by 52 into 16 into 68. This is 2594,462. 25,94,462. 25,94,462. Once again, 1,24,000 because production is more divided by 52 into 16 into 68. 25,94,462. 25,94,462. Debtor at cost price, you already calculated Debtor, creditors. Here debtor at the cost price 15 lakh 56,667. Fifth working note 15 lakh 56,667. 15 lakh 56,677. 7. There is no prepaid expenses, nil. Any cash in hand? Credit allowed. Raw materials estimated. Finished goods over. Credit allowed over. This over. This is credit sale. 80 rupees per unit. Nothing is there. No prepaid expense. Add total current assets. 7 lakh 63,077 plus 10 lakh 30,155. 25 lakh 94,462 plus 15 lakh 56,677. 59 lakh 44,371. 59 lakh 44,371. Will repeat. This is the total current assets. 59 lakh 44,003. 25, 15 is 30, 40, 50, 57. Okay, it will come. So creditor for purchases, working note we have done. In the working note, creditor 11 lakh 44,615. 11 lakh 44,615. Then lag in payment of wages. Credit allowed, selling price, raw material store, unit of production, finished goods over. Credit allowed by supplier is over. Selling price per unit is over. No lag in payment. Nil. Nil. Now 59 lakh 44,371 minus 11 lakh 44,615. Total current liabilities. Working capital 47 lakh 99,756. No any contingency nil. Net working capital 47 99 756. We have got this is total creditor 11 lakh 44,615. 47 lakh 99,750. Heavy amount is there. That's all. So if you go with the problem here, Production is so much more, 1,24,000. That is why lakhs of rupees has come. And your labor is proportionate to sales. This is proportion to sales, selling price. Proportion to selling price of rupees 80. So 50% of 80 is 40, 10% of 80 is 8, 15% of 80 is 12, 10% of 80 is 8. That's working out here. See that? 50% of 80 is 40, 10% of 80 is 8, 15% of 80 is 12, 10% of 80 is 80. Your total cost comes to 68 and your selling price is 80. So there is a difference of 12. This is the profit. Production for the year is 1,24,000 units. Out of that, 20% is the cash sale, 24,800. Then come back here. Production here, no. Labor here, no. Work in progress. Raw material in stock for here, no. 8 weeks means you got 2 months. 1,24,000 divided 52 into 40 into 80. So work in progress, I told in the last session also, in the first session also, take the material full value, labor half, then overhead half. Here extra is manufacturing expenses. One more expenditure, manufacturing expenses. So 1,24,000 by 50 into 40 into 8, 7 lakh. So 1,24,000 8 into 40, 1,24,000 8 into 8 into half. Then 1,24,000 divided by 52 into 8 into 8 into half. 1,24,000 divided by 52, 8 weeks into 12 into half. It will work out. Your work in progress will work out 10,30,155. Finished goods on the cost price 1,24,000 by 52. So they say 4 months means 16 weeks at the cost of 68. Debtors, the cost price working out now. Now, total current asset 59,44,371. Your current liability as per creditor for purchases on raw materials 11,44,615. Lag in payment of wages, lag in payment of overhead. So total liability is 11,44,615. So difference is 47,99,756. There is no contingency. Net working capital is 47,99,756. It may add about 10% contingent, 10% of this is okay. So I told you current assets minus current liabilities called working capital. Here there is no cash in hand is given, no lag in payment was given, only current assets and current liability have taken into consideration. But the production is only 20% is the cash sale, means 80% the credit sale have taken. Debtor will be calculated only on 18%, 80% of the cost price. Hope you have followed. Hope you have followed. The same thing what we have done in the second session 2. Session 3 also we have done the same thing. Only point 2, calculation should be perfect regarding the process, no, material full value, labor half value, overhead half value, manufacture overhead also, all indirect expenditure you have to take into half value, whereas material only full value you have to take. Creditor for purchaser, debtor on the cost price, finished goods on the cost price. Hope you have followed. Definite problems from the examination point of view, better to go through it. So we'll meet in the next session with another good problem on working capital. Till then, goodbye. Meet in the next class.